All right, if you're an investor in Eli Lilly, you need to see this. We're going to give you the essential breakdown of their monster Q3 in just 5 minutes. Let's get right to the numbers that are moving the stock.
So let's start with this number, 54%. I mean, what is that? That's their year-over-year revenue growth. For a company the size of Lilly, 54%, that's not just growth, that is just massive. Massive acceleration. And then there's this, the bottom line. $7.02 non-GAAP EPS. Look, this wasn't just a beat on Wall Street estimates, this was an absolute demolition. They blew the doors off expectations. So what's the takeaway here? It's simple. Eli Lilly isn't just growing anymore, it feels like it's hitting escape velocity. So in this breakdown, we're going to dig into the 3 key pillars that are driving this incredible performance, and more importantly, what it means for what's next.
All right, let's get right into it. The headline numbers for this, well, it was a total blowout quarter. Honestly, these figures pretty much tell the whole story.
Okay, so you see the top-line revenue, right? $17.6 billion. But the really interesting part, the part that investors need to focus on, is how they did it. This was driven by a 62%, let me say that again, a 62% increase in volume. That tells you this isn't some pricing trick or financial engineering. This is just raw, overwhelming demand from real people for their products. So that's the big question, right? Where did all that demand come from? And that brings us to the first pillar of their success, the incretin growth engine. You've probably heard of these drugs, Mounjaro and Zepbound. Well, they are the absolute powerhouse behind this whole story.
And this chart just lays it out perfectly. Look at that. Mounjaro and Zepbound. Together, that's over $10 billion in 1 quarter. Think about that for a second. That's almost 60% of the company's entire revenue stream from just 2 drugs. It's just incredible concentration, and it shows you how much the market wants these products.
And get this, the growth rates are just off the charts. We're talking triple-digit growth. Mounjaro more than doubled year over year. Zepbound, it nearly tripled. This is exactly what explosive demand looks like, and it's the absolute core of the bull case for this stock. Right here.
Okay, but any smart investor is asking the next question. Great quarter, but what's next, right? Past performance doesn't guarantee future results, so let's look at our second pillar, how Lilly is de-risking its pipeline to make sure this story has legs.
You're going to want to remember this name, Orforglipron. Why? Because this is potentially the next holy grail. It's an oral GLP-1, a pill, no more injections. Think of how many more people would be willing to take a daily pill versus an injection. This could blow the market wide open. It's not just the next step, it could be a complete revolution in how these conditions are treated. And this is why it's so important for investors right now. Lilly just announced positive results from not 1, not 2, but 4 separate phase 3 trials, and they're planning to submit for approval by the end of the year. Every single one of these successful trials is a huge de-risking event. It takes this massive future moneymaker from a maybe to a very likely.
All right, so the demand is there. The pipeline looks fantastic, but there's a huge question hanging over this whole space. Can they actually make enough of the stuff? And that brings us to our third, and maybe most important pillar, building a manufacturing moat.
And look at these investments. These are just numbers on a spreadsheet. These are strategic chess moves. Lilly is pumping billions, we're talking over $12 billion, into new and expanded manufacturing. Now, why is this so critical? Because their competitors are struggling with supply. Lilly isn't just trying to meet demand, they're trying to build a fortress. A supply chain so big and so efficient that nobody else can catch up. That right there is how you build a powerful, long-lasting competitive moat.
Okay, so let's recap. We've got dominant products, a de-risked pipeline, and a massive manufacturing moat being built. So, how does all that translate into the numbers for the rest of the year? Let's check out their updated guidance.
And here you go. When a company raises its full-year guidance this much, this late in the year, that's one of the most confident signals management can possibly send. They're basically telling Wall Street, yeah, that amazing quarter, it wasn't a fluke. We expect this to continue.
And you can see it right in a CEO's own words. David Ricks lays it out plain and simple. It's a 2-part strategy. Sell as much as you can right now and build like crazy to own the future. That's it.
So, this is what it all boils down to. The company is firing on all cylinders. The execution is just about perfect. The pipeline's getting stronger. The moat is getting wider. So for you, the investor, the question isn't, is this a great company? The question is about price. With the stock where it is today, how much of this incredible good news is already baked into the valuation? That's the billion-dollar question you have to answer for yourself.